Vikas Khemani joins us. Let's take our conversation forward, understand what his understanding of the market setup is. Vikas, good morning. Thank you for joining us. This year again is off to a good start. The big trend is that Reliance is outperforming, large cap stocks are making a comeback. Do you think this comeback from small cap to mid cap and mid cap to large cap will only magnify going forward?
Hey Nikunj, good morning. I think, see, in a market cycle, these kind of intermittent, sort of moves are natural. We had a sharp small and mid cap rally in last 8, 9 months, and I think large caps were underperforming, so now they are catching up, and large caps are also due to the flows from the foreigners as well. So last year we saw slightly higher outflow, and that had taken a toll on the large caps in some sense performance. But if you see, large part of domestic money was coming more towards mid and small cap. So we are seeing that bit of change happening. We are seeing bit of a sort of negative narrative getting built around the valuations of mid and large cap, small cap. So I think this kind of intermittent shuffling is possible, but as I continue to believe that we are in the middle of a very big mega bull run, and in that, if you take 5, 10 year view, mid and small cap will outperform. But having said that, of course, overall market wealth will get created, and large cap also will do very well.
Vikas, hi, morning. I guess the big eyesore from within large caps also continues to be private banks, selectively albeit, but you've not seen any performance from HDFC Bank. Even after it hitting the 52-week low, it somehow dragged itself a little bit higher. But no.
There is a stock specific issue and there's a bank, overall banking sector. Since HDFC Bank is a very large component of that, it appears that private banks have not done well. But if you see, many private banks, including ICICI Bank, Axis Bank, have done very well over last 3 years, last 1 year. Of course, in between there was a consolidation which was happening because there was a narrative that NIMs might come under pressure, which is possible and which will happen. But if you take, so this kind of consolidation is very natural. But I do believe that banking and especially the private banks will continue to do well over a long period of time, because it cannot happen that Indian economy grows to become $10 trillion economy, but banking sector does not grow. So both private and public sector banks will do well. Of course, HDFC Bank is going through a bit of a consolidation phase because of the merger and a lot of capital deposit raising they have to do, and bit of a shuffling of shareholding happening from HDFC Bank to other banks, including private sector bank and public sector bank. So because of this, it has underperformed. But I'm sure next 6 to 12 months time, that will kind of get settled and things should come back.
You feel that pharma is at an inflection point. Why is that?
Sorry, Vikman?
You feel that pharma is a value and the sector is at an inflection point. Why is that?
I think pharma is, if you see, if you say last 1 year, before that, almost 7, 8 years, there was hardly any return, especially led by a lot of overhang in the US markets. We have seen over last 1 year that getting lifted, pricing scenarios improving. Of course, India has leading market share in the global medical generic space, which is now with pricing pressure going away, doing very well. Domestic pharma, no doubt, was doing well, continues to do well. So if you look at combination of these two things, I think we will see a good structural sort of growth in pharma as a space for next 4 or 5 years. And, valuations are not as demanding. Of course, recently some run-up has happened, but still, I feel valuations are not very demanding. You compare it to, let's say, consumer play. Pharma and consumer profiles are not very different, but valuations were in consumer far more demanding than pharma. So I feel that and it was under own sector. So all these things are changing slowly, and as they are changing, you see sectors doing very well. So I see we are in a middle of a very big bull run in the entire pharma pack.
Complicated sector, because I can start with an MNC pharma company, talk about a generic company, talk about complicated generics. What is the right spot in pharma? Is it CRAMS? Is it generic? Is it Europe? Is it India?
I think Nikunj, you're right. It's a very good question that you should just not look at broadness pharma, because pharma is a lot of sort of nuances to it. As a house, we have been quite bullish on API space for quite some time, and we've made a lot of money in that, and we continue to remain very bullish from a China plus one shift strategy. A lot of API companies are going to do well. Likewise, again, domestic pharma, company, which so what recently we have kind of picked up in companies where domestic pharma business is good, but US is seeing turnaround. So the delta on the returns would be far higher. So, ideally you want a combination of business, which is good domestic business growing at a steady pace, and turnaround coming from from US business. Those are the kind of pharma and generic space we like. But we also have bought companies like Syngene, which are in CDMO, Newland in CDMO space. So you got to look at company specific because each company has nuances. Some companies are exposed to emerging market, which are also doing very well. So in general, pharma is very well placed, but within that, each model has to be understood and kind of looked at from a risk reward perspective.
Because given that you believe that India is that one opportunity wherein there is, plethora of alpha generation ideas, help us understand where else in this kind of a market where everyone's so worried about toppish valuations, this and that, and, growth concerns and stocks running up ahead of what the growth trajectory should indicate towards. Where is it that you're seeing opportunity other than pharma, which you just highlighted?
I think there is a war. I mean, again, stock specific, activity had to be looked at. Generally, it is all bottom up, but India generally is a very wide market. The width in the market, in my opinion, amazing. As the economic growth towards, 8, $10 trillion over the next 8, 10 years, we will see a very widespread growth happening across financials, manufacturing, in the consumer space, in the infrastructure space, in IT also. So within that, you have to identify which are the niche spaces within IT. As we've spoken earlier in the past, that mid-cap IT is doing very well, especially ER&D is set to grow at 20-25%, over many years. So those are the specific spaces will do well. Manufacturing, we've spoken many times. There are niche companies which are going out and doing very well. Last year was very bad for chemicals. I do feel that chemicals will do well over a period of time, and we've been buying for last 6, 8 months a lot of chemical space, specialty chemicals. I'm talking about, not the commodity chemicals. So you can find interesting plays within the financials. I would say look at non-credit plays where again a lot of opportunities happening, capital market focused, AMCs. So I can only say that India will surprise everybody. People who talk about valuations and get worried about India will surprise on the growth over next 5, 7 years. Of course, your time horizon is 3, 6 months. I don't know, but if your time horizon is from long term perspective, I continue to believe that India will surprise on the growth, and hence valuations. Worrying about valuations early on will be quite risky.
Like manufacturing is a great thing because everybody knows that things are moving as per the script. But if one looks at manufacturing stocks, I mean, I'm looking at EMS stocks, P multiples are higher that of consumer. I'm looking at names like ABB, Thermax, P multiples again 50 times. Can real wealth be created when you're buying stocks irrespective of the sector if they're trading at 50 times plus and when the underlying growth is 15, 20 times, 15, 20%?
Absolutely. So buying at any price is a more stupid strategy, I can tell you that. And we don't believe that at all. So in any wealth creation, buying at a reasonable price is very, very important. And hence our mantra has been quality growth at a reasonable price. And hence we don't own any of the names you mentioned. In the same capital goods space, all you need is like we recently bought PHL, which I think is, has done very well and continues to do very well. So you could find in a same market. The thing is that you go with the broader narrative and look at the same beaten down stock, which may be large AMCs or foreigners buy, or you want to buy stocks where the risk reward is very well placed from a long-term wealth creation perspective. And I think there is second point I'm talking about is where a lot of money to be made. And I can only say that we find lots of ideas. There's no shortage of ideas at a reasonable price. Our portfolio valuation, if I look at the collective basis, is lower than the index valuation. The mantra we follow is faster, stronger, cheaper. My portfolio should be growing faster than the index. It should be stronger in terms of ROE and debt to equity, and it should be cheaper in valuation. If you follow this, I think even in bad times, you should be able to manage your risk. And if you manage your risk in the shorter term and long term, I think it should come out very well.
Got a name which has really worked well for you. That's Aditya Birla Capital, AB Capital. It is one of your top holdings. You think the entire big picture thesis of a turnaround and getting efficiencies right and change of management, has that thesis played out at 200 rupees?
I think it's early playing out. It's like one to say that if what ICICI Bank was in 2019, Aditya Birla Capital was at 100 rupees in 2022, 23. But now the journey has begun. So I feel that if you look at next 3, 4 years, it is likely to walk that kind of path. Because see, today also it's a reasonable evaluation. Growth is very well sorted. Company is transforming digitally. So we are in a very early stage of a transformation journey for the company, we feel, and the leadership is sorted. There are very few NBFCs where there's a borrowing profile is sorted, leadership is sorted, and market is of course huge. MSME is very fast growing segment where they are exposed. The digital capability which the management has built in such a short period of time is just amazing. So I feel that it's a long way to go. We don't buy stocks from short-term perspective. So I think it can multiply from here also, provided your horizon is slightly longer. And I think it will beat, in my opinion, entire NBFC pack.
Appreciate your time. So glad you could join us, and thank you for your valuable inputs.
Lovely chatting with you, Nikunj.
Now, what are we discussing today? Well,